Good morning, everyone. Thank you for joining us today. Going to give it a couple of minutes or seconds, I should say, while everyone kind of files into the room. There we go. Starting to see everyone trickle in.
I'm amazed, Lauren, at all the people that are always coming to the show. I just want to do a quick shout out to everybody that's joining in, and thank you so much, especially those, as Ted always called them, frequent flyers that are hanging with us. Just want to say how happy we are to have you with us.
Oh, look, Emma says hello. Good morning, Emma. Yeah, we love our frequent flyers. We love the ones that are newbies as well, but those frequent flyers definitely keep us going. So thank you. Thank you for joining us. All right, I think we should go ahead and get started. Irene, of course, thank you. Thank you for joining us. We're happy to help. Okay, everyone, good morning. My name is Lauren Simpson, and I'm with the SBDC, or the Small Business Development Center. And I am joined today with the fabulous Lori Williams. Good morning, Lori, to you. You have, Kelly, you are correct. She is amazing.
I tell you, thank you so much. Man. It's awesome. I just think I'm just Lori. Thank you so much.
Everyone, good morning. You have joined us for SmallBiz Talk. It's solutions for your small business. And again, your host is Lori Williams, and my name is Lauren Simpson, and I just kind of run the behind the scenes things. So I'm gonna go ahead and start my screen share and give you a quick introduction as to who we are. I did say the acronym, but it's probably a little bit easier just to quickly run through who the SBDC is. Again, the SBDC is a national program. We have locations throughout the country at it's about 1,000 now. So whatever city you might be in, you should be able to get connected with a local SBDC branch. Again, we offer no cost because your tax dollars pay for it. No cost offerings, including trainings as well as advising. For the Los Angeles network, we have just under 10 locations, and you can see them here on this map. We go as far out as about Camarillo and Santa Clarita, over to Pasadena, down to Long Beach. So anywhere in that surrounding area, you should be able to get connected with the Los Angeles Regional Small Business Development Network. A deeper dive into what we do. Again, we offer no cost business advising, where you can meet one-on-one via phone or Zoom, because of course we are Zooming more so these days. But you can get connected with a business advisor on various topics, from marketing to social media to finance to you name it, we've got it. And then we also have virtual trainings similar to what you are attending today. And then again, to get connected with us, please contact the LA area. I'm sorry, for those in the LA area, contact us at 866-588-7232. Or you can connect with us online, smallbizla.org/new client. And then for those of you outside of the LA area, you can connect with your local SBDC office at americassbdc.org/find-your-SBDC. And with that, actually, let me do a few housekeeping rules. For those of you who have questions, please enter those into the Q&A. Lori will not be monitoring the chat for questions, but she can see the Q&A. So please be sure to add all of your questions into our Q&A. And then if you have any questions outside of that, i.e. questions regarding receiving our recordings or anything that isn't necessarily pertaining to the show, you can drop that into the chat and I'll quickly get back to you. But again, those of you who want questions answered by Lori, please enter those into the Q&A. That was a mouthful, Lori. With that, I'm going to kick it over to you.
And I'm going to add on a couple things, Lauren. So Lauren will put her email address into the chat. I do try to get to all the questions, but some of them I can't get to. And also there's some questions, Lauren, they're just too long and involved for me to answer on a show format. You guys really need to sit down and have a one-on-one either with myself or maybe somebody in a different expertise like Deborah in social media. So when I see some of those questions, a lot of times I don't bring them up because they're just too in-depth. So please, please reach out to us, get signed up as a client. You can ask to meet with me on a topic that I cover. You can ask to speak with another representative. So I just wanted to mention that. And all of the information you do send in does get viewed. So don't feel like it's one of those forums where you enter information and it goes into a bucket and nobody looks at it. Lauren's awesome. She stays on top of everything. And the other thing that was so exciting, I went on YouTube and our shows are on YouTube now. So Lauren, just doing behind the scenes, guys, she's doing a lot more. She's doing a ton. And so now all of our past episodes and our future episodes are on YouTube. And I think there's an Instagram, and I'm basically only social media savvy through Lauren. Otherwise, I'm not, but through Lauren, we're everywhere. Okay, guys, we're going to get into today. Now, I'm going to start out by answering a couple quick questions that have been asked consistently, and I just got some emails on asking them today. Many of you are asking from a perspective of the PPP, the RFP, the Restaurant Revitalization Grant, and as well as the California Relief Grant. You're asking if these are taxable. Very good questions. Let me break them down. So with the PPP, let's take one at a time. As I was starting to kind of group them together, I thought, nope, this has the potential of getting confusing. I better take one at a time. You know, anytime we start talking tax, it can get confusing. So let's take the PPP. The PPP is not taxed as income. So in other words, that amount that you received is not taxed as income on either your federal or your state income taxes. Notice I said federal or state. A lot of times people say, is it taxable? And they don't realize that there's rulings for federal and there's rulings for state. So you got to look at both. So the PPP is not taxable on both a federal or a state level. Now, you know the deductions that you claimed, like for example, you had rent, you had wages, whatever type of expenses that you claimed as covered costs for your PPP, those expenses can also be deducted off of your federal and state income tax. When the PPP first came out, very confusing. At first, IRS said it was taxable. Then they said you couldn't do the deductions. And then California said it was taxable. And they stayed where it was taxable up to pretty much the last minute. So there's a whole lot of confusion about whether it is or not. And so when you Google it, you might even see that it's taxable or you can't deduct the expenses, but you got to look at the date. And may I make a statement on that? So many people use Google to find out tax and finance and legal information. And I can only urge you, please, please, please double check, make sure you're at a .gov, make sure you're at a reliable source. I see so much information that is not correct. And literally, if I take any subject matter, I always want to go to the IRS website, the government websites. That's where I go. I go to the horse's mouth, like I always say. But when I Google a topic, I have to go sometimes 10 down to get away from all the ads and all the people's opinion and everything to get to the real substance, okay? So be really, really careful that you don't start looking at these other conversations. I think it's Reddit or something like that. I had somebody call me one time, they got their tax information from Reddit, and I'm like, oh my God, that's so scary. No, don't do that, okay? So anyway, back on where I am. Now with the PPP and the RFP, they follow the same rules. So they're not taxable, expenses still deductible. The California Relief Grant is the different one. The California Relief Grant in California, it is not taxable and the expenses are deductible. And guys, somebody out there may know different, and I'm still watching this. As of right now, I have not seen the IRS change their tune on it being taxable. So what I'm saying, guys, is that from what I've seen, the California Relief Grant is taxable on a federal level, on an IRS level. I keep checking their site to see if it's changed. So I can't say that maybe there's something out there that I haven't found, but so far the only of the PPP, RFP, and California Relief Grant, the only place I'm finding it taxable is the California Relief Grant on a federal level. That's where I'm seeing it taxable. Okay. So I wanted to get that information out. I also want to repeat something because people keep asking about, and this has to do with the EIDL, but let me actually get into the slide on the EIDL as I do that. So let me get this going here. Little bit about me in case you needed to know, but most people know me by now. So on the EIDL, and I'm going to get into a part about the 4506T, but let me get this part out first. As of January 1st, no new COVID EIDL applications, okay? But those of you who are still involved in the reconsideration, if it's 6 months from the date of the decline or 30 days from the date of the appeals, they're still working through this process. And I'm still working through with people in this process of the EIDL reconsideration. Still slow, guys. You need to just stay on top of it. I'm going to give you the information on how to get in touch with them in a second, but I want to bring everybody's attention to this bottom paragraph on this slide. Borrowers can request increases up to their maximum eligible loan amount for up to 2 years after their loan origination date, or until funds are exhausted. I don't know how much funding is available at now. I can't answer that question. I think it is on the SBA website if you really dig deep, and I haven't. But the key here is for those of you who have not asked for an increase and you still have allowable maximum eligible loan amounts in your loan potential, I always strongly urge that you at least check it out, because funding and new grants, we don't know if anything's coming down the pipeline. As of right this minute, we're not hearing about any new stuff. I know that Congress has been talking about it, but it's just a few people talk about. I like to talk about laws and bills, not just congressional discussions, because who knows where that's going to go. So, you know, this is such a great low interest long-term loan. If you haven't taken advantage of it, you might want to check into it as far as a increase. If you haven't applied for all, once again, they're not taking any new applications. And as a side note, guys, and either in 2 weeks or sometime after that, one of my presentations is going to be just about what we're talking about here. I'm going to have a couple people that are involved in the lending business and say, hey, what is out there for small businesses? Where can they get funding now that many of these programs are no longer available? So stay tuned, guys. That's coming up in the near future. Okay. And here is the information for getting in touch with the SBA. I'm going to give it a second for Lauren to put the information into the chat. And what I have learned repeatedly from my clients is if you call on a Saturday or Sunday early morning, better chance of getting through. And the other thing I wanted to tell you is that I have people that I've created, you know, different things for them to send. They send it, they call them, they haven't received it yet. You know, it's really just, it is what it is, guys. Stay on top of it. That's how I want to say it. 4506T, they're going to ask for this every time. Don't be confused by this. It is similar to if I called up my bank and I asked information, they say, can I access your account? We've all heard that. Okay. Can I access your account? If I call next week and I have another question or I have the same question, they're going to say, can I access your account? They're going to ask me again. Okay. So all of that 4506T back and forth a million times, it's a can I have access to your account? That's why you're having to fill it out all the time. So don't think there's something weird. It's supposed to happen that way. Now, I've said this before to those people who are with me all the time. 4506 is a legal document. Treat it as such. Look at your business tax returns. Make sure you fill it out verbatim. If you have your name spelled out, spell it out. If it's a company DBA, put the company DBA. If the street address is Drive and your tax return, write Drive. It's got to match exactly, because when they take that form to the IRS and say, hey, please give me the record so I can evaluate, underwrite this loan. If it doesn't match exactly, it just comes back unverifiable information. Then you get unverifiable information and nothing happens. And another code, and we got a question about this today. I've seen this before where you have withdrawn your application. Okay. Now, when I've seen you withdraw the application, what I suggest first is sending an email to them in either of their emails, their recon email or their COVID increase, and include a 4506T, include your tax returns 2019, and put in that subject application and process and say, you know, this says I have taken out my application. I have not. Please let me know if it's the status, because you don't want to, you can't apply for a new one. And I have seen where I think, this is my guess, guys, I think there ends up being like a time frame. And if the IRS doesn't give the 4506T, they withdraw the application. But I've had experience where people have sent an email out questioning it, and then they found it and reinstated, which brings another topic. I'm seeing this too, you know, and these are just things I'm noticing because I work on so much of this EIDL reconsiderations. The SBA, I don't know why this happens, but sometimes they do send out emails that really aren't true to your situation. So you get an email and it says something, of course you're going to think it you know, is about your situation, and you have to act as if it is, but it doesn't guarantee it is. I know, sounds strange. Let me explain. Couple of clients now, they got one that said due to an IP address, it's been identified as fraud. Got a hold of the SBA and they said, no, that went out, that wasn't supposed to. So really, all I'm saying is you got to make it a priority to follow up, check on things, contact them, ask again. I even had a client just recently go, I just got this now after all this. Should I call them again? Should I go through this? And I get that feeling. I mean, eventually you might say, hey, it's not worth it. And there's nothing wrong with that. But I guess just going in, know that it's going to take a while and you're going to have to do quite a lot to you know, get there. Okay, so what we're going to talk about today, and like I said, I'm watching the Q&A, so I'll get to as many questions as I can as well, is we're going to go back to year-end business planning. What should I do? Last week, I said there was 4 areas of focus, and we talked in depth about making estimated tax payments, okay? So this week, we're going to cover these 3 items to the depth that we get there, at least start to talk about them depending on how far we get. So the first thing I'm going to talk about, organizing your financial documents for tax filing. What do you need to do? It's end of the year. Now, many of you have gone through this process a couple times with your business, and so you pretty much understand, but some of you, it's a brand new thing and you're not sure. So I'm just going to kind of quickly address what do you need to do. And let me try to get this larger so you can see. If you are an LLC single member or a sole prop, it's this middle section here that you need to make sure you have the information for your tax preparer or yourself completed. And so it's this part 1 right here under expenses that you need to pay attention to. And you can see it's like advertising. A lot of people would have that as a category, but they may not have employee benefit programs, right? You can see that travel and meals under 24 here and 24A and 24B are different because travel has a different tax application than meals. Meals, you only get 50% of the deduction. Travel, you get 100%. So if you pull up a Schedule C, if you've not seen a Schedule C before, you can actually Google IRS Schedule C, profit and loss. This says from sole proprietorship. It can say LLC. It's the same thing, right? But you just pull it up and look at this middle category. And that's the type of information that you need to have. So wherever you have your data, you just want to collect it under these categories. Now, you may have advertising, marketing, social media receipts. You can see advertising is the main category they're going to use. So you just total it up to advertising. In the top, you have gross receipts from sales and the total cost of goods sold. I'm going to talk a little bit about cost of goods sold in a minute, and then gross profit. So really, if you look at part 1 and part 2 of a Schedule C, that is going to tell you what information that you need to have for tax return time, okay? And what you should start collecting. Let me get back to here. And then if you're an S Corp or tax like an S Corp, same concept. It's just a different looking form, but you can see the top is really the same. And the middle section, once again, it's got compensation of officers. This would be how much you paid yourself through a W-2. We talked about the reasonable salary last week. Salaries and wages would be your employees. And then you've got the same type of thing. You got advertising. The 1120S has another document that breaks all the expenses out into a more of a detail. 1120 tax returns are much more involved. And so even if you're a S Corp, you can look at a Schedule C because it breaks down the categories. But that's what you want to consider when you're preparing for tax time. Okay, that's the kind of information you want. Now, I want to bring up this part. This is real important. And this has to do with your financial data. A lot of people, what they do, especially if they're using QuickBooks, they literally just run a profit and loss statement and a balance sheet and send it to their tax preparer without ever looking at it. And I know this is especially true of the balance sheet. Anybody who's worked with me through the SBDC, you notice the first thing that I always ask people to do is send me your balance sheet. They never look at the balance sheet. The balance sheet is so important, guys. It is the least looked at document, and it's one of the most important documents in understanding what's going on within the company. In fact, as a banker, that was one of the sheets that we looked at the most. And currently, when people's balance sheet is incorrect, they don't look at it. They don't know, they send it to a lender. The lender looks at it, and I'll show you in a minute what I'm specifically talking about, but the lender banker looks at it and they see these errors. They can't trust the data. And as a banker, we would be, if we can't trust the data, one piece of the data, we can't trust any of the data, right? And it makes it could stop you from getting a loan, or it could make it longer time period. You got to then present more data. So it's really important. If you're going to use QuickBooks, you have to have a better understanding of what you're doing. Now, notice I said, especially if syncing data. My opinion, Lori's opinion, I'm not a fan of QuickBooks Online. And what I'm really, really, really not a fan of is syncing data. Okay. So if I set out to you guys, you sync your telephone, you sync your phone numbers. Do you believe that you're going to be able to sync your telephone data, your phone numbers with your phone and never have a mistake? I bet everybody's like, no, eventually I'm going to lose a phone number, or the numbers are going to switch, or it's going to go in this column versus that column. Every time I ask people that, they agree within a second, a millisecond, that syncing data is going to cause a mistake, right? And then I say, well, then how do you feel comfortable syncing your credit card and your bank statement and believing everything's going to be fine? Unfortunately, QuickBooks has sold everybody kind of a line that says, hey, just sync up the data, push a button, and it happens miraculously and everything's wonderful. Guys, from being a finance person, totally not true on any level. And you got to think another thing, if you just think it through logically, anybody I ask, even if you never had a company before, if I said to you, is finance a major component of having a company? Everybody's like quickly to say yes. If I said, if you look at a company and you look at the employees, is there a large number of employees in the finance department? Everybody quickly says yes. So how is it that a small business suddenly could have no need to have financial oversight, that data is just going to be synced? It's not even logical, okay? And so what you want to do is you want to look at the balance sheet, and I'm going to show you in the next slide what I'm speaking of to kind of check. I can't ever, when I look at a balance sheet, I can't say what's exactly right or wrong, but I can see what's suspect, and I can tell some things are absolutely wrong. So I'm going to show you this in a minute, and I'm going to have everybody, when we're done with the show, stay on the show. When we're done with the show, get into your QuickBooks, go into your balance sheet and look for what I'm talking about. But before I switch to that one, I want to go to this very last line here. This is another thing I'm seeing with syncing data. I started the show by saying the PPP and, the EIDL, or not the EIDL, I didn't mean to say that, the PPP, the RFP, and the California Relief Grant, in certain situations is not taxable, okay? Well, what happens is that when people put the money into the bank account and they synced up their bank account, if they weren't good at catching that dollar amount, the dollar amount goes under income just by the way the syncing had been set up in the software. Remember, software is dumb software. It's not analyzing. It's not going, oh, wait, that money is from the PPP, or that money's from this. This isn't money from clients. So what I'm saying, guys, the software just saw money being deposited and it said money deposited equals client invoice, right? Now, if you check every single one and you do that through the process, you can catch this, but a lot of people don't check it or they didn't catch it. And so it goes into their big income bucket, right? Well, then I seen this last year, people then gave the financial statements, the profit and loss statement, to their tax preparer, and the tax preparer didn't question it. A lot of times it's hard to pick up if it's just a small amount. And I don't see all the time tax preparers looking through the data and questioning things. And so what they actually had is, here they get the PPP, they shouldn't have to pay tax on. It's mistakenly recognized as income on their financial statements. The tax preparer doesn't question it. You're paying taxes on the PPP when you should not have to. So you want to check to make sure any loans and grants that you received are not showing up on your income statement under income. It should be at the very, very bottom under other income. And it should be, I like to do this, I like to title it as a single transaction, put California grant or PPP or whichever it is. That way it's alerting the tax preparer that this other income is coming from these things that have a different tax treatment. The term other income, I like to explain it. It's kind of like a junk drawer, okay? You know, things that don't go into the normal place, they get put in a junk drawer. So income is referring to those main activities of sales around your business model, right? Other income is money you got that doesn't have to do directly with your business model. So for example, if I had a building and I was leasing the building and I didn't need as much space, so I got a tenant and I'm getting rent, but I'm in the business of making some widget, I'm not in the business of being a landlord, any other income from the rent or any income from the rent, see, I automatically say other income, any income from the rent would be under other income. If I got an insurance, there's also other expense. If I got an insurance, a one-time charge, if I got a insurance refund one time, it's things that don't happen on a common basis. They happen one time, and that's where the PPP and all these other grants, they go in under other income. So please check to make sure that's not happening. I'm seeing it in too many places. Now, why I said check your balance sheet. So I just grabbed a balance sheet off the internet just as an example. But what I see is in your cash account, your checking account, I see negative numbers. This tells me immediately it's a syncing issue. And if that number is negative, I know the transactions throughout could be wrong. Obviously, if it's negative, it's saying you have negative amounts in your bank account. And I have seen people using QuickBooks for a year or so, never checking, and have these huge, like 100,000 negative numbers, and they only have 10,000 in sales. I mean, I exaggerated a bit, but unfortunately not too much. So under current assets, there should not be any negative numbers here. There should be no negative numbers. If you see a negative number, you got to wonder why. Now, under accounts payable here, if you, well, let me go back up to one more here. Let me go back up here before I go too far. Accounts receivable. Accounts receivables is money that clients owe you. This is another major mistake I see. When it's negative, it means that a client overpaid you. Often when I fix the problem in QuickBooks Desktop, I work a lot with QuickBooks Desktop with people. I like that software better. I teach people QuickBooks Desktop. If somebody's made a mistake in QuickBooks Desktop, they usually didn't create an invoice and took in a payment. So it looks like the client paid you, but didn't owe you any money. Or they made a mistake, like say you sent, I always use small numbers, say you sent a client in the software a $10 bill, and then the client paid $12. Well, you really should have put in the number 12 and you didn't. Then it looks like the client paid you $2 over. When you come to the next year, it doesn't pick it up. So you really want to do a year-end balance sheet and make sure accounts receivable is not negative. And you want to run an accounts receivable report. That's why I like QuickBooks Desktop. It's got all these reports that allow you to be more accurate. Someday I'll get into more on online versus desktop. But you want to run an AR aging report to make sure that nothing is negative. And I know some of the people that are on the call right now that I worked with, and I know I don't even have to say your name, guys. A shout out to you. You know who you are and why I'm telling you this. And I say that because they're laughing, because they've gone through this with me, fixing things for them. And if they go over too many years, it gets really, really challenging. So check the AR, it should not be negative. Now with accounts payable, same thing. Accounts payable should not be negative. That would mean you overpaid. And accounts payables, I see people's credit cards listed here, and they'll show a credit card overpayment of 3,000, meaning a negative 3,000 or a negative number. If there's any negative numbers here, it's saying you paid more than you owed. And it's not that you paid more than you owed. These are incorrect accounting journal entries. Or, we call journal entries basically when the software does something, when entry. So let's call it data entry. Let me use a better, easier term to understand. So you've done something incorrect in the data entry, or the syncing did something and wasn't corrected. So none of these should be negative. The only place you're going to see negative is under retained earnings, under owner's equity down here at the bottom. You could see a negative retained earnings. And if you have owner's draw here, that's taking money out, that would be negative. That would be correct. Paid in capital. When I see a negative number there, I know somebody set it up wrong. That was like saying, hey, I'm going to invest in a company with a negative $1,000. I mean, that is an awesome idea. I mean, I could invest in companies all day and have parts equity, but I'd have negative equity. In other words, guys, it doesn't make sense. You can't have opening balance equity is another term that QuickBooks use for paid in capital. You can't have negative numbers, okay? So I urge everybody, get into their QuickBooks balance sheet, run a balance sheet. And you don't run balance sheets like you do P&L with specific dates. What you do is you just run a at the time date. So it just says balance sheet, in other words, when you run it. So go in, check your balance sheet and take a look at it and see what is happening there, okay? Make sure there is no negative numbers. And if they are, make sure that you get this stuff changed and fixed before you just send it to the tax provider, okay? So that is on that subject. Let me get over here. I'm going to talk about an assessment of yearly performance, but first of all, I am going to take a look at some of the questions. Wasn't it changed to 100% deductible for meals? If it was, and things change all the time, I can't keep up with everything. So I didn't see it 100% deductible for meals. Maybe it was a situation temporary. I can do some research and get back with you guys on that. But I think it's still 50%. I had somebody else ask that too. So I'll have to get into the IRS database and see if there's anything I'm not aware of. So my answer to that is, I don't know about that being so, but I will get back. That's another thing about me, guys. I only answer what I know to be true. Anybody who's working with me, I try. And ever since the pandemic, it is so hard. Things change constantly. And all I got to do is not look at one site, not look at a layer in the IRS database, not look at anything. And I could easily be wrong. And I try so much to be right. Anybody who's works with me know I really do try to always know, but you just never know. You just never know. ERTC terminated for the fourth quarter in 2021. Yes, the ERTC has a deadline on that. It has a specific date and it is being terminated. I don't know if it was exactly at the fourth quarter or right around there, but hey, Lauren, can you have both of these people who asked this question, they know who they are. You guys put in the chat your information or get it to Lauren or email Lauren. I'd like to follow up with you personally and get the right answers, because I have the exact date the ERTC was terminated in my file. I can look up and give you that. So I can do some more research and get back to you on, guys. Just get Lauren's email and email the question directly to her, tell it to come to me, and then I'll have a copy of that and be able to get back to you, okay? So that I wanna make sure I can find out what the truth is on that one. I'm just reading something really quick. So we got a question about the PPP and Forgiven and also the small business hiring tax credit. This is another one I'm going to ask you to go ahead and send me. I know it's anonymous, but if you could get this to Lauren, I don't think you can use them. I think it is double dipping, but there was some small rules that they had about the small business hiring tax credit. And I want to read those fine prints again, but I don't think you can use the same payroll dollars for the PPP and the small business hiring tax credit. But like I said, some of these questions are so specific. A lot of times what I have to do is go check my database, check the IRS, check everything before I say for sure. So please reach out to Lauren on that one. You guys are giving me good questions this morning. Stump. I like I said, I don't want to, those are my first takes on the answer, but I'd rather check into it to find out exactly what it is. Okay, I think I have EIDL grant is not taxed by state or federal. Do you have an answer on that one for you? The grants and forgivable PPP are classified as other income. Yep. So other income, what happens is on a P&L, it has income at the top, and then other income is way at the bottom. And you've probably never seen it because unless you use a category, it doesn't come up and you don't see it. So what you'll do is you'll classify it as other income, and then you'll see that that will appear at the very bottom of your P&L. And like I said, it's not uncommon that you may not have ever seen it because you didn't use it before. And if you don't use it, if you don't show it, it doesn't show up. Okay. So guys, now we're going to go back into an assessment of yearly performance. So this part, I'm going to do the best I can in this type of format to explain some really cool stuff. How's that for a great way of saying it? Really cool stuff. Those guys that worked with me before, you've seen some of the stuff that I'm doing, and it's a little bit complicated, but not. Okay, let me just jump into it. Here's what I'm trying to say. You know, I always have this type of, I don't want to call it a lecture. If for those of you who are old like me, you've heard the expression soapbox. So here it is. Small businesses must do analysis on their numbers. Okay. Larger companies, they had people, even small, middle-sized companies, they had people like me, CFOs, coming in and doing analysis in their companies. Small companies don't do no analysis in their company. This is awful. It is awful. You have to know especially your profitability. What we're going to talk about right now, you have to know how profitable are you at making the product. How profitable, or service. Anytime I say product, I mean service. So everybody applies here. There's no company that's going to say, I do this, I don't apply. All companies apply to these rules. So you need to know how profitable are you at making your product or service. How profitable are you at selling your product or service? How profitable are you at running the company? How profitable are you overall? And most of the companies that when I start to work with, they think they know the answer or they don't know the answer at all. This is like saying, and I always try to relate it back to personal things because people have a better understanding of this. So this is what I'm going to do. I'm going to go out and I'm going to buy a house. I'm going to get a car and I'm going to go do a bunch of stuff, but I'm not going to pay any attention to whether I have a job, have money coming in, or how much money I have coming in. Everybody knows that's crazy. They're like, okay, no. You have to know, are you going to, can you afford it? Can you afford it tomorrow? Are you making the same thing you made last time? You got to know all that. Same thing of a company, guys, same thing of a company. So what I'm doing is I can't in, this amount of time take an in-depth dive into this, but I can take enough to get you a feel for it. And I might have a one session that I only talk about this. So I'm also going to say to you guys, if as I start talking about this, you're like, yes, Lori, we want to deep dive into this, tell me, and I'm going to do a whole session on it. I didn't know if people wanted a deep dive. So no further ado, let me tell you what we're talking about here. Let's get started with this. Okay, so the first thing I need to tell you guys is that data has to be extracted from your financial records and it has to be aligned properly for analysis. So here's the thing that small companies don't understand. They believe that the P&L and the balance sheet and running documents from your accounting software is all you need to do the analysis. So I'm about to break a secret to you guys. People who function CFO, Chief Financial Officer, or do kind of financial analysis, we have a ton of Excel documents. Even when I was I always was the interim CFO in different companies, even when I would manage companies' finances and they had elaborate accounting software, I still had a ton of Excel documents. Accounting software is for the purpose of what is called financial accounting. Financial accounting refers to having data to fill out financial reports that are required for outside viewers. That was a mouthful. All I'm really saying is you got to do a tax return. Bankers might want to look at it. Investors might want to look at it. So when you look at accounting software, it is aligned. It's lined up. It presents it in a layout. I'm trying to use all different words so you can see what I'm talking about, but it presents it on a page in a certain layout that is constant, that anybody who is an outside viewer and looks at that financial data knows how to read it. Oh, here is a great example. You know, I said other income has to be under other income because it's outside your business model. It's income outside your common business model. It's so what if you made more money renting your little space, like my example before, than you actually made making widgets? If you put it in income, and I looked at your profit and loss statement, I would have a false interpretation. Another key words here, false interpretation, that you did well when you didn't. Your main business model didn't make any money. The only thing that saved you that year was the renting of the space. That's why other income is in presentation in a certain layout. So going back to what I was saying, financial management follows this specific layout. So an outside viewer, whoever they may be, can look at it and quickly assess what the numbers consist of. That doesn't mean they still may not have to ask more information, but it gives them a roundabout understanding of what the data means, okay? Now, managerial accounting is a whole different thing. Managerial accounting is for decision making. And I might want from a managerial accounting to have the data lined up differently because I want to look at something to make a decision within my company. Here's an example on this from what I spoke of a bit ago. When I showed you guys the Schedule C to get your tax returns done, financial accounting, I showed you the line of advertising and said that internally you may be tracking social media, you might be tracking, you know, other forms of marketing. You know, say you send out flyers, if you still do that, I just got to use an example. You might be doing social media, print advertising, what have you. And then when it comes time to fill out the Schedule C for the taxes, they lump it all together into advertising, right? So that's financial accounting because the tax structure doesn't care whether you spent the money on social media or if you spent the money on print advertising. It's not like meals and travel, right? It's not distinctive. It's not treated differently. So for financial accounting for your taxes, it's lumped into advertising, right? But if I turned around and said to you, hey, what did better, your social advertising or your print advertising? Which your social media I meant, or your print advertising, and you had them all lumped under advertising, you can't answer that question. So from a managerial accounting perspective, you're not capable of answering that question properly. So managerial accounting is about lining up the numbers in a way that you can make decisions within the company. And I don't care if you have your data in a file folder, in QuickBooks, in Excel, in a shoebox, you can do this. Everybody can analyze this. So don't think you have to. Anybody that's listening says, I don't have my information in QuickBooks, doesn't matter. In fact, you've still got to extract and reanalyze a lot of this out of QuickBooks. So I'm talking to everybody out there. I don't care what kind of job you got. You can be walking dogs. You can do this analysis. Now, what you need to do this analysis, and I'm going to go over these three things in detail. You need monthly and yearly expenses, and it's really cool if you have historical data. Historical data means data that already occurred a year previous, current data, and then you also have forecast, because you'll see how you can put them together. And like any situation, the more data you have, if you can line up data together, you have a better understanding. And I'm all about data. People laugh at me and say, my favorite word's data, but I do love the word data. I really do. Choice and data, my two favorite words. If you analyze the data, you have better choices in your company. See, they come together. So, but at the least, you need monthly and yearly expenses. You need to know the cost of goods to produce your product and service on a per unit basis, and the data must follow accrual accounting matching principle. hold on to that one in your back pocket. I'm going to go through that one in a minute. And then you must know your total sales. I also call it revenue because these words are used interchangeably. And it can be categorized for additional analysis. Like you might say sales wholesale, sales direct, sales online. You can categorize it for even more in-depth analysis. And once again, it's really cool if you have historical, current, and forecast. So let's take the first one, the easy one. What you want to do is if you have some kind of chart like this, you can do this with a pencil and a paper. I just put it in an Excel document just to show you an example. But all I'm doing, guys, is I'm doing my overhead expenses. These are just the overhead expenses. And historical data, in this case, what is this year, 2022? I lose track of year. So I would have, maybe 2019, then I would do it for 2020 because I'm analyzing last year, and then I would do the forecasted for 2022. So I put dates in. And all I'm saying is these are the amounts that I spend. And if I didn't have one of these, I would put 0 so it lines up properly. So if you look at like the rent, I can see a story. Well, the rent, and I just make up numbers. So don't view like that's cheap rent or anything. I just make these numbers up. So if the rent previously was $950, you can see it went up to $1,000 and it's going to be $1,200 in the upcoming year. This process allows you to analyze that your expenses are going from 16 to 20,000. Oops, just touched it too close with my pen. You went from 16 to 20,000. So in this first exercise, if I can call that, you're getting a feel for what your expenses used to be, what they were last year, what they're going to be. You start to go, okay, we're going up almost 4,000 on expenses. We got to see how that's going to net out in the big picture for next year. So you can see I'm already starting to think, expenses are going up. How much are we going to have to sell? What's our gross profit going to be? We're making decisions to make sure that we hit the numbers we're supposed to. I've used this reference before. Think about like an airplane, pilot driving an airplane, how they're off course a lot during the time period, but they land where they need to be. Well, I can tell you from a CFO perspective, you see, even in large companies, if I use Wall Street as an example, they arrive right above earnings or right below earnings or a penny per earnings. Believe me, they're not going out through the year with their head down like small businesses do and look at them and go, let's put in the numbers and see where they are. They're managing the process. When I am managing somebody's finances, I'm doing this on a quarterly basis. I'm checking everything. I'm seeing where we are. We're making sales initiatives. We're making marketing initiatives. We're making cost-cutting initiatives. Decisions are being made throughout the year by monitoring this information. This is just a piece of it, but you can see this is a really, really easy piece. All you got to do is fill out something like this, okay? Now, I got to stop and explain something big to you guys. And this is the crux as to why most small companies don't analyze their data, or if they analyze it incorrectly. So sit back for a second. I got to explain something to you and tell you where it messes things up. And this is where I'm coming into that number 2, where I said, I just read it and said, hey, I'll get into that in a minute. Okay, we got to talk about cash versus accrual accounting. I can pretty much say everybody that's listening to me reports taxes on a cash basis. Your internal accounting, if you use QuickBooks, cash basis, okay? You are not doing accrual accounting. 26 million or more use accrual accounting. If you're under 26 million, you use cash-based accounting. The IRS demands that. You have to do this big thing to even get them to let you use accrual, which you should not. So from a perspective of how your software for your accounting is set up, it's cash. How you are reporting on your taxes, it's cash. Now, for those of you who says, well, I can go into QuickBooks and I can select accrual. No, it's got to be entered as such. So it is not truly accrual, it's cash, okay? So cash-based accounting simply means cash that came in, cash that went out. That's all it means. So money you got in from clients, money you paid to vendors. So let's look at that for a second. Say that I invoiced a client on, I'm going to make up the story, so you can kind of see December 31st, I invoiced the client, but I didn't get paid till January. That is not included in the taxes, and it's not included on my P&L because it's only cash in. I didn't get paid. Well, say that I paid for enough of Maybe I'm making something and I do packaging, and I bought the packaging to put the product in enough for the whole year, and I paid for it December 31st. That's cash out, right? So if I look at my profit and loss, it's not going to be correct because it's not showing me the invoice I sent to my client, and I would have maybe already done the work, right? And it's not showing and dividing the amount I just bought for inventory for my boxes for next year. So it's not going to make the numbers lined up properly. So cash accounting is absolutely how a small business should do it, but it doesn't allow for proper analysis of profitability. So pretty much everybody I've ever met just doesn't do it, or doesn't do it properly, and doesn't even realize their numbers aren't true. But what I do is I create a cash accounting report because I feel it's just so important to know this. And there's a term in accrual accounting called the matching principle. You match revenue to expenses. So if I sell one unit for $10, I figure out the cost of one unit, which is maybe $6, knowing I have $4 in gross profit. In my example, I didn't sell the unit yet, so it's $0. I paid for the cost of the boxes next year, so it's $20. So it shows a negative 20 under cash accounting. You could see that's not truly my gross profit. So you can't rely on the internal profit and loss to do this analysis. You must use a separate document, an Excel document. So what you have to do, get this to go forward, is you have to create something along this line. Let me get a drink real quick here, guys. Hold on. Not an alcoholic beverage, by the way. So what you do is you create something that says, okay, this is the quantity I sold, the sell price, the cost, the gross profit, and then the gross profit margin. Now, there's a million ways to do this. I showed you this. You can do averages. It doesn't mean like if you're a restaurant, you got to sit down and analyze this. I can even do all kinds of analysis. I might say, well, overall sales were 30% this, and this has a profit margin of this. I might say, well, the average gross profit margin and everything's about the same, so I'm not going to apply it. So I'm showing you the detailed logic. I will take rules and apply to lessen the amount of analysis, but this is the detailed process. What I want to point out is when you look at something like this, I made the numbers up to show you, but what's really important, like look at product 5. I sold the most of product 5, but it's got the lowest gross profit. So when I analyze this, I might go, maybe I don't want to sell so much of product 5 anymore, okay? And what other small companies do that don't do this analysis is they go, product 5 is selling like hotcakes. Let's put all our marketing into product 5, right? So the next year, they sell more product 5 than anything, and they wonder why they don't have any money. They were better off with 7 on product 4. Look at the gross profit over here, the 85%. So these numbers are really important. In fact, just yesterday, and I talk about this a lot. I had a client, and they were able to get their product into stores, right? And everybody gets their product in stores, and they go, wahoo, I made it. It could be true, but it could be the worst day of your life. When she had the product in stores through the distributor, they were taking 50% of her gross profit. So she was down to like 20% of gross profit. And when she sold online, she was 70%. Luckily, she didn't sell that much through the distributor, because if she did, she would have been negative. She would have had to take a loan to keep the company going. And I showed her, I said, if you're going to sell through distributor, you either have to increase your price, you have to get them to take less, or you have to find maybe a product like product 4 that has a high gross profit and offer product 4, but not product 5. So my point of this is, until you break down your products, and even if you don't know quantity sold, you should have every product, every service 2, based it on the hours it takes you to produce. You need to have a chart that looks like this so you fully understand. See, another thing I want to point out, I took an average here. Average is 71%. It's really not a true number, because look at, I sold 10 of this. So even if I take an average gross profit in this situation, I'm not got correct data. I need, guys, back to high school, a weighted average that says if I sell 10 of these at 49%, 7 of these at 85%, to come up with the true number. So what you have to do is you have to look at your product or service and see how much the gross profit margin, differs. You have to look at how much of the quantity of sales differs. And I can't tell you the number of clients that have come to me. I've looked at their financials, and my answer to them is don't sell this product anymore. And they would have never guessed that, because they are actually making money here and losing money here. It's that old statement, 2 steps forward, 3 steps back, or 1 step back, whichever your financials lend itself to. And I tell you, my heart literally goes out to how many small companies don't understand this. That's why I love working with the SBDC. I have for over a decade, is I could take the information that I know from being a CFO and working with bigger companies and being a banker, and my huge history of being in finance, and teach this to small companies, and awareness is going to help you to make better decisions. So this is why you have to do some kind of analysis. It may not be as detailed as this, but somehow you have to have an understanding of what your gross profit margins are. And for sales, you can have something simple as historically I sold 10,000, currently I sold 12,000, and forecast is 15,000. Now here's where I'm a stickler, guys. I don't pull numbers out of the air. I don't. I refuse to. I want to know data has logic behind it. So I might do a thing where product 1 is price. I think I'm going to sell 2. Product 2, this is the price. Think I'm going to sell 5. And if I believe I need to increase price, I might do forecast. Well, how many can I sell here? How many can I sell here? I put just numbers in quick. So I'm selling more at a higher price. It could be because I'm selling in other places. But what I'm saying in this slide, guys, yes, do your sales, but don't pull these forecasts out of the air. You want to get it down to saying, how many am I going to sell? How am I going to sell them? Is it a repeat customer? How many new customers do I need to get? You want to get into the actualities in your mind of what's going to happen. I always talk about Einstein's thought experiments. For those of you who are not familiar with Einstein thought experiment, okay, told in Lori style. So Einstein, theory of relativity, he created his theory by imagining in his mind what it would be like to ride a light beam. The way I like to say it is Einstein was sitting on his couch with his feet up, drinking a Starbucks, going, man, what would it be like to take a ride on a light beam? Okay. My point is, you can't tell me Einstein could imagine riding on a light beam, and you can't imagine what marketing is going to have what percentage return in what places. You can't. You just got to do the heavy lifting and think it through. So don't just create up a number, create a number with some purpose, some plan, some action. It's the whole thing is you have a series of thought, and then you have the execution. You got to do thought, you have to execute, and then you have to check to see if your thought is correct, and if not, change your approach. That's the definition of how to find success. Take action, see if you're getting results, change your approach until you do. It's not just one. It's not just take action and let it fly until the end of the year and see where you're at. You have to keep checking everything. So then once you get this data, you can basically make your own little own little P&L. And this is just a sample form. So like 10,000 minus my cost of goods, I figured out 3,000. And what I did is I matched. These are the exact same units sold to the exact same units that is purchased. So this is the matching principle. The income to the cost of goods is the same units, okay? I didn't have what I bought in inventory, what I didn't get paid for. I would actually look at it in an accrual fashion. So I matched the number of units sold in income to the number of units in cost of goods. If I figured those units would happen over a month or a year of expense, I matched that. And then I have a completely accrual, properly lined up income statement that I can use for analysis. And then this is the picture that shows you how you can bring it all together. So once I have this analysis, I can take it into percentages. Percentages are the key. Guys, I love percentages. When you put something in a percentage, you can analyze it better. So all I did was I took 10,000 divided by 10,000 for 100%. I put the 100% there so you'd see. Then I just took everything and divided it into income. You could see 3,000 divided by 10, take it to a percentage, 30%. 1,000 divided into 10,000, take it to a percentage, 10%. 6,000, 60%. I used easy numbers, you can see here, right? And then I know my gross profit margin is 70%, and I just repeated my net profit margin again. So if you guys look in the middle, look in this middle section right here for me, okay? And I'm going to give you 2 sentences. In Lori's company, Lori's made up company, For 100% of income, it takes 30% to make the product or service, 10% to pay the expenses to run the company on a daily basis, 60% left over to pay and reinvest in the company. To pay myself, I meant, if you didn't see the point, to pay shareholder or pay owner, right? Another sentence, same concept. I'm just going to move the percentage to a decimal point. For every dollar sold in Lori's made up company, it costs 30 cents to make the product or service, 10 cents to run the overhead, 60 cents left over to pay the shareholder, pay the owner, and reinvest in the company. And you can see gross profit margin of 70% and cost of goods of 30% adds up to 100%. So out of 100%, it costs 30% to make the product, 70% is left over to pay overhead, and then overhead's 10%, and that's where you get the 60%. These percentages are golden because then you bring the big thing picture together and you can do projections. So when I look at this, I can say, oh, I got my cost of goods down, my expenses went up by 1%, and that allowed my net income to go up by 5%. So this end product here is what I get to that I analyze on a monthly, I analyze year over year, I do all this data. So today's goal was to really just give you a good idea of what I'm talking about with this analysis and to introduce to you the concept that yes, this analysis should be done. So now couple quick questions I'm going to address. Lauren's going to send out this presentation to everybody that attended today, so you'll be able to look at it and see it, and I'll also address questions coming up on that. If QuickBooks is not a good idea, what would be good and efficient way to record, manage my small company business and get my biz finances ready for tax time? I'm a sole prop, no employees, thank you. Love this question. I always tell people, and I can get into this in one of the sessions too, a lot of times a simple Excel document set up properly. I work a lot with people setting up Excel documents, customizing it to their business. They can manage it, they understand it. I'm a big proponent of QuickBooks Desktop, but I can't tell you how many clients that I work with the SBDC and just help them to make an Excel spreadsheet that they can manage. It's easy, and I put the tabs in the way that it should be set up for accounting, so they can just send it directly to their CPA at the end of the year. So, and I already answered about the webinar. Lauren's going to make sure the webinar, you're going to know where to go and get that. And I am going to make sure that you get the PowerPoint presentation. Is wages part of the cost of goods sold? Wages that are directly related to the production of product and service, yes. Okay, let's see. I'm making a chair. I got somebody that's hammering in the nails. That would be part of cost of goods sold. I got somebody answering the phone and doing the selling and marketing. No, part of expenses. So only if the labor is directly involved in the production, and you do have a choice. You can put the labor involved in the production under admin, and you can do that through the financial accounting as well. If it's a large component, I like to keep it under cost of goods because it helps me to stay more conscious of it. It helps me to have my eyes on it. Okay, so I have a much better way of looking at it. Yes, if you want to work with me, get through Lauren. I'm work with the SBDC, and I got a few here that I didn't get to. So those that have a little bit more complicated question, please just send it to Lauren. Key that you wanted to come to me. It's some things that I really need to answer in more detail than I can during this call. Like always, Lauren, I went over. It's just so much to share through everything. So guys, I just want to say before I hand it back to Lauren, I know I went through a lot. I know you maybe didn't pick up every piece, but my concept, if I got you guys to walk away understanding it's important to monitor these numbers, it's manageable to monitor these numbers, you can make better decisions. I have achieved a lot. I always tell people, small businesses make decisions on their gut. The gut is awesome when it has data, okay? So I want your guts to have data. There are some gut decisions you have to make, but when they're made on the gut alone, emotional decisions do not lend them well financially, legally, most of the time. So you really need strong data, okay? Lauren, back to you.
Lori, thank you so much. Another incredible, incredible session. Everyone in the Q&A, I'm going ahead and sending you a quick note just to send me your question, and I'll be sure that we get you an answer. And then to those of you in the chat, it's been lovely chatting with you. I see tons of information being shared amongst peers. I think that's amazing. I am also listing a question, or I'm sorry, listing my email in the chat so that everyone can connect with us there. Any questions?
Laugh at this one. Keep going. I have another 2 hours to listen to you, Lori. Thank you for that one. Okay, that was hilarious. I may not have 2 more hours into me, but my heart's with you on that one. Thanks. Sorry, Lauren, I had to laugh at that.
No, don't be sorry at all. Again, I've listened to you every session and I still learn something every single time. So just like everyone today, learning so much information. Lori, you have been amazing. And it's just great content, really great content. So with that, everyone, I'm going to list my email one more time. Any questions that you have going forward, please email them to me at lsimpson@lbcc.edu, or I'll also list our form or question submission form. If you have any topics that we should cover next time, please enter those as well on that form. And again, we look forward to seeing you next Wednesday at 10 a.m. Go ahead, Lori.
To do though, we got it announced. I almost forgot. Next week we got a guest interview. This is going to be so much fun. There's somebody I worked with the SBDC through all of this. She created a product. I can't even remember how many years ago, started selling at flea markets, got into stores, learned a lot of the lessons we're talking about today along the way. She's going to be on next week and she's going to tell you all about her longtime experience and really rocking, rolling and trying her best and having some setbacks, especially financially. And she's going to share with you the 3 lessons learned. And then, like I said, after that, we're going to come up and have a financial grant discussion as well. But I forgot to introduce our session for next week. Back to you, Lauren.
Fantastic. Thank you. I nearly forgot it myself. So to that, Lori, I think that's it for today. Thank you to you. Thank you to the over 100 people who joined us today. Thank you. Thank you. I know. I just kept seeing the numbers grow and grow and grow as we went through. It's amazing.
I'm so glad. I'm so happy for everybody that joins us. I can't tell you how much I'm touched by it. And I'm going to come here and talk as long as you guys will listen to me.
Thank you, Lori. Thank you. Thank you. And thank you to all of you who joined us today. Have a wonderful week and we will see you next Wednesday at 10 a.m. Goodbye.
Bye.